Wonderful good day, ladies and gentlemen. Third day of Mines&Money London 2015, and we are now at the booth of Danakali. With me here is Paul Donaldson, the Managing Director and CEO, and long time we have interviewed a potash company, so I'm quite happy to be here. Welcome.
Thank you.
Paul, Danakali, you are the first time here, and for our viewers, what's the company about?
Okay, so Danakali was formerly called South Boulder Mines. We've been operating in Eritrea since 2009 and have identified a 1.3 billion tonne resource of potassium-bearing salt suitable for the production of potash fertilisers.
Wow.
We renamed the company Danakali in May this year. It's just more reflective of where we are and what we're doing. And we've been progressively working through the studies to de-risk the project. This week we've released the results of a positive definitive feasibility study.
Oh, fantastic. Yeah, let's talk about the results and then let's jump in. How do they look like?
The results look excellent. Actually, we're very happy with the outcomes of the definitive feasibility study. We had a 30% reduction in capital expenditure relative to our pre-feasibility study.
Helps a lot these days.
Yes, so the internal rate of return for the project is 29%. We're taking a modular development approach which balances the risk mitigation with economic returns and fundability. The first module, which is 425,000 tonnes per annum production of potassium sulfate fertiliser, is an attractive project by itself. The capital requirements are $298 million US, and the IRR of that project is 25% with an MPV of $440 million US.
Oh, that's nice.
The two modules together, the second module is $175 million US, and the MPV increases to $860 million US with the IRR of 29%.
Can you probably finance the second model out of the first model?
Yes, we believe that the second module will be funded from cash flows from the first.
Fantastic. I mean, $290 million is quite an amount of money. It's not the big billion thing, which is not financeable these days. But you have already an idea from where you get the money?
Well, first of all, let me say that this is one of the most fundable potash projects in the world. Given the size of the ore reserve, which is a massive 1.1 billion tonnes, and with the two modules that we've got planned for the definitive feasibility study, that equates to a mine life of over 200 years. So firstly, let me iterate that point. Secondly, good projects will get funding. Development of Kaluli is inevitable. We've already started the funding discussions. Inherently linked with the funding discussions are our approvals. The approvals process for our mining licence has been initiated. We'll submit all of the documents in the first quarter of 2016, but we've already initiated funding discussions and they'll progress over the next 6 months, but we're confident that we will be able to secure the funding because this really is a world-class project, and the amount of money, yes, it's high, but in relative terms for a potash project of this scale, it's not.
Okay, fantastic. Let's come a bit to the project itself and let's say the surrounding infrastructure. I mean, you are in Eritrea, right?
That's right.
So it's Africa, of course, and give us an idea about infrastructure because you are moving big tonnage.
Okay. So in terms of infrastructure, one of the unique and positive features about the Kaluli resource first is its proximity to coast. Only 75 kilometres from the Red Sea coastline, but importantly only 180 kilometres from established export infrastructure within Eritrea. The port of Massawa is the key import-export facility. It's got skilled labour there that understand shiploading processes and also, as I said, established infrastructure. There's a coastal road that runs all the way to the southern end of Eritrea. We will construct a 50-kilometre road to connect the mine site with that coastal road, but for all intents and purposes, the access to infrastructure is very good.
Fantastic. What would be then your market? Where would you sell the potash you will produce?
Well, the potash type that we're producing is potassium sulfate, which is a chloride-free fertiliser which is ideally used for high-value crops such as fruits, nuts, vegetables and coffees. But importantly, it's also a fertiliser of choice in arid operating environments where rainfall is low and you don't have the water to wash the chlorides away from the plant roots. And that's really Northern Africa in the Middle East, right where we are. We're strategically located at the epicentre of booming population growth in Africa and Asia. But our key target markets are the Middle East, Southern Europe and Africa itself.
Fantastic. How do you see the potash market, let's say, in general? I mean, there have been some issues some 2-3 years ago. I remind there was this big cartel breaking up in Belarus, right? And then the potash prices started to drop, of course, and some of the bigger projects had difficulties. So where do you see the market in general moving?
Okay, first let me say, I'll talk a little bit about what potash is to clarify what the market really looks like. So potash is a generic term given to a variety of potassium-bearing salts and manufactured chemicals primarily used as fertiliser. But there are a number of potash types. They're differentiated by chemistry, and they've got different crop applications and different levels of economically extractable resources. So the potash type that we're making is potassium sulfate. Resources, economically exploitable resources for primary production of potassium sulfate are geologically scarce. So the demand for potassium sulfate's been increasing, as has the whole demand for potash in general. But because of the lack of new projects, the price of potassium sulfate's actually remained quite high. So it's got a substantial and sustained premium over the more common potassium chloride, and potassium chloride represents the bulk of the potash market. And so when people talk about the potash market, the cartels breaking up, the price coming down, they're talking about potassium chloride, not about potassium sulfate. So our fertiliser type is a premium chloride-free fertiliser which has sustained and substantial price premiums.
Well then, Paul, thank you very much for the interview, and we wish you all the best on that. It looks like that you have a real feasible project, and we keep fingers crossed in 2016 that you can move it ahead.
Thank you very much.
Great. Ladies and gentlemen, there was Paul Donaldson, the Managing Director and CEO of Danakali. And you heard it there in Eritrea, a sensational project with 29% IRR, 1.3 billion tons of resource. And it's a premium product what they do. It's a potassium sulfate. Was that correct?
Yes.
Yeah,
yes.
sulfite, and premium product which is required really in a lot of agriculture industries. They really need it. So let's see. The data is fantastic. Check out the company. Thanks, and bye bye from London.